USD Non Farm Payrolls came in today less than predicted at 157,000. I'm joined down the line by Jarratt Davis Currency Trader at Independent Portfolio Managers Ltd to discuss the reasons behind the numbers and his predictions for the US economy. Jarratt, were the results today what you were expecting?
Well, to be honest, if you look at the last few months worth of data from that announcement, we're actually quite seeing a lot of positive numbers. And after Wednesday's ADP version, which was positive, to be honest, we were expecting a slightly more positive number than actually came out, and also from the unemployment rate, because obviously the Fed has been working on the labour markets, trying to get it going, trying to improve it. So we were expecting something a bit more positive than actually happened. So it wasn't a massive shock, but it was a little bit of a surprise to see those numbers come out.
US GDP declined 0.1% in the last quarter of 2012. How is the economy still creating more jobs through this decline?
Well, the GDP, the thing about that GDP is obviously for the final quarter of 2012, and obviously that was affected. There's a lot of people, analysts particularly, talking about that number being affected by things like the hurricane that hit the US during that time. So that GDP number, it sounds a lot worse than it probably is, because if you look at the other GDP, for the majority of 2012, there was actually growth. And most traders and investors that we work with are still expecting that to continue. So we wasn't really too concerned about that particular GDP number because of those extra things that were going on. Now, in terms of job creation and improving the labour market, which obviously is what the Fed's trying to do, the main tool for that at the moment is obviously the bond buying programme that they're doing, and the stimulus, the quantity of ease and all those stuff. That's kind of their main tactic for that at the moment. We don't really see any kind of affirmative action from the US government in terms of creating jobs at this moment in time. There's a few little programs going on, but I think there's a few traders and investors that think that a little bit more could be done on that in that regard.
FOMC members have said an unemployment rate around 7% by the end of 2013 may be sufficient to halt bond purchases. Unemployment figures out today showed a rise to 7.9. Do you think we could see the Fed end quantitative easing any sooner?
Well, like you say, the Fed are looking for that number to drop, obviously, from 7.8 down to 7, or as low as they can. And today, the number actually came out at 7.9. So that unemployment rate is actually getting a little bit higher just today. So personally, I don't think that the Fed are going to halt with their program. They said they announced on Wednesday that there's no change to their intentions. They're going to keep up with it. At least until year end, until the job market shows signs of improvement. That's not happening at the moment. So personally, my bet is that will just keep going without let up for the time being.
The implications of job numbers for the US dollar remain really intriguing. What effect do you think the results today will have on the dollar?
I think the effect on the dollar of what's happened today and this week, in fact, we'll see a lot more dollar weakness kick in. I think, for example, the euro-dollar currency pair has broken its 12-month high this week. It's printed new highs every single day against the US dollar, and the dollar's just weakening further and further. And these unemployment numbers that have come out worse than expected, the non-farm payroll that's come out worse than expected, are basically only going to exacerbate this. So, in our opinion, over the next few weeks, maybe the next quarter, we just see further weakness, both for the US economy and the US dollar.
Finally, Jarratt, from the results this week, what are your forecasts for the US economy for the rest of the first quarter?
Well, I think in terms of GDP, the US, like I said before, the US GDP has actually been growing most quarters over the past few years. The headline numbers that you see aren't as bad as it seems. It's just a case of these little things, these kind of short-term things. So, for example, you've got the debt ceiling, you've got the fiscal cliff which happened, you've got this current GDP number. So all these things keep cropping up as hurdles, basically. I think the US will ultimately overcome. I think the US ultimately will start to strengthen again. But I think for the next quarter or two quarters, certainly 2013, things do look like it might get a little bit weaker for the US dollar and the economy as a whole before any kind of recovery takes place.
That was Jarratt Davis from Portfolio Managers giving us his insight into US employment data. For more updates, just click back to the Dukascopy website.